This segment is all about selling your business in today's economy. Welcome to the program. I'm Mark Imperial, and this segment's brought to you by booksgrowbusiness.com. It's the place where busy professionals get their books done and published to educate consumers, lead their fields, and to leave a legacy. Joining me on this segment is John Hornblower. He's the managing broker of VR Business Brokers in Aspen, Colorado. John, welcome to the show.
Thank you very much. I'm happy to be here.
John, tell us a little bit about your work and specifically, who are the types of clients that you specialize in helping?
Well, let's back up a bit. I studied economics at Harvard and then went to Wall Street and traded derivatives, complex financial instruments with institutional investors for 25 years. Moved out to Aspen from Wall Street and decided that there was a greater need out here, that all too often, small businesses simply shut their doors rather than employ the services of a professional small market investment banker to manage the transition out of ownership and management for them. And so I left the securities business and started a mergers and acquisitions practice. And I do business under the VR Business Brokers franchise name. And I found it very interesting and tremendously rewarding through the ups and downs of the business cycle. Unlike the securities business where securities are going to trade no matter what, businesses don't always trade. In a normal environment, the difference between what a buyer is willing to pay for a restaurant, say, and what the restaurant owner is willing to accept is typically about 20%. So the restaurant owner thinks his restaurant's worth $1 million. A buyer is willing to pay $800,000. And it gets more complex from there. But during a downturn, as we saw during COVID and in the aftermath of COVID, that bid offer spread, that difference between what buyers are willing to pay and what sellers are willing to accept, has expanded to basically 2 to 1. So the seller wants $1.2 million now because there's so much uncertainty that he doesn't know what he's going to do after he sells his restaurant. And a buyer is not going to pay $800, he's going to pay $600. So there's a lot of wheel spinning during these slower market times. But eventually, people, both buyers and sellers of businesses, become impatient and they say to themselves, I've got to get something done. Or the restaurant owner says, I've got to get my hip replaced. I just can't keep this up anymore. I've got to make a decision. And buyers are the same way. I mean, many buyers are leaving the corporate world and want to become masters of their own destiny. And eventually, when push comes to shove, that bid offer spread gets narrower again and transactions start to happen. And that's where we are right now in the business cycle. Things are looking better. Before COVID, I had 17 listings, 17 businesses who had engaged me to sell their business, to manage their exit for them. And during COVID, that dropped down to 3. So COVID really was a body blow for the small business brokerage industry, but it's coming back now. I'm at 8. So we're making our way back, and some of my businesses are looking very promising. I have a professional landscape architecture practice for sale, one of the most well-respected practices in Colorado. I have an electric bike shop, sales and service business with underlying real estate for sale. Very interesting business in a rapidly growing market segment. I have a naturopathic regenerative therapy practice for sale with underlying real estate that offers 30 different non-invasive procedures to slow the process of aging and to accelerate the process of healing after a patient goes through a surgery or has another traumatic injury. And there are other run-of-the-mill businesses. We have a roofing company for sale. We have a very profitable clothing consignment store for sale, if you can believe it. So what I do in my office spans the gamut, and I think is very important. I hate to see businesses simply closed when, with the help of a financial advisor, mergers and acquisition specialist such as myself, the seller can unlock the value that they have created over the years, and the buyer can tee up their dreams of acquiring the American dream. So that's where we are in a nutshell, Mark.
Well, John, as you mentioned, too many businesses go unsold and are unsuccessful in selling. And what causes that? If you talk about the seller, do they lack the knowledge of what it really takes? Are there any preconceived notions or maybe misinformation that they hold that prevents them from being successful in selling their businesses? Where's their head
But
at typically?
by far the largest culprit in that regard is an exaggerated idea of what the business is worth. I mean, a business, you can get a business valuation done by an appraiser who does appraisals for divorces and lawsuits and that sort of thing. But in my mind, coming from a derivatives background, that's like modeling out what the theoretical value of a business is. In my view, the value of a business, just like the value of anything, is what someone's willing to pay for it. And buyers are looking for cash flow. They're looking for reliable, diversified sources of income that are scalable and that are asset light. For instance, I sold one of the larger steel companies in Colorado in 2016, and they had an equipment list of almost 700 pieces of equipment. You know, $500,000 cranes, a factory floor, a lot of fixed investment. And to a bank, that's valuable because there's a lot of collateral that can back an acquisition loan. But to a buyer would much rather buy an asset light, business to business computer software program that can be easily scaled without a lot of additional investment.
When you start working with clients, have you identified any like big common mistakes they make or pitfalls that they fall into that can be easily avoided? What kind of
Well,
mistakes do
most of the
people make?
problems come from the seller's side. Most buyers are sophisticated. They know how to read an income statement and a balance sheet. They've had some education in business valuation. But a lot of the aging baby boomers who've been doing the same thing the same way for a long time see no need to change. And so for the most common example is in accounting standards. You know, non-standard profit and loss statements are all over the place amongst sellers, and a lot of sellers just are not willing to spend $1,000, $5,000, $10,000 to recast their profit and loss statements so that they are presented according to GAAP, according to generally accepted accounting principles. And going one step farther, most managerial accounting P&Ls are done on an accrual basis. So if say you've got a construction company doing $1 million remodel in Aspen, and you know the remodels go up from there in this market, and they are 80% done with the work, but they've only received 20% payment. That extra accounts receivable is going to be recognized as revenue on the managerial statement because they've done the work and they expect to get the money. It shows up as an accounts receivable, but on their tax return, they haven't gotten the money, so they don't have to pay tax on it. So between the managerial statements, which are typically prepared on an accrual basis, and the tax statements, which are typically done on a cash basis, the CPA's got to do what's called a book to tax reconciliation that explains the difference between one set of books and the other. And I've had a number of deals falter during the due diligence period, the due diligence period being the time between when a buyer agrees to buy a company so long as the due diligence pans out and the closing table. So that's the biggest pitfall among sellers is an exaggerated sense of value. The second is non-standard accounting statements. And I would say the third is where the owner of the business is so deeply involved, just knee deep in the day-to-day operations of the business, that there's some risk that when the seller leaves, the business might falter. And so my advice to people thinking about selling their business is: one, get your books and records up to snuff. Two, put in place a management system so that the owner works on the business rather than in the business on a day-to-day basis, so that somebody can come in, fill the owner's shoes without scaring off all the employees and all the clients because the seller's so intimately linked with the value of the business. And then the other thing is business owners, here's the fourth thing: business owners hate to pay taxes. They want to run every possible expense through their business to reduce their tax liability. And that makes my job as a business broker more difficult because I have to add up every one of those expenses that is a form of in-kind income to the seller and say, well, the business reported $250,000 in pre-tax net income, but the real profitability of the business was $750,000, and here's why. Here's how the owner of the businesses ran a bunch of expenses through the books in order to reduce their tax liability. So in the 3 years, the 2 years, the 1 year going up to selling your business, it's in the business owner's best interest not to take every possible deduction as possible. Reduce expenses as much as you can to maximize pre-tax net income, pay tax on it, and you'll be paid more when it comes time to sell your business.
So, John, before I ask you my last question, in regards to selling a business in today's climate, is there anything that I didn't think to ask you that you think is important to share with business owners?
Yes, a very small percentage of buyers of businesses are ready to write you a check for $1 million. They're in a position to maybe write you a check for $200,000, but the bulk of the $1 million purchase price is going to be satisfied by a combination of bank loans and seller financing. And to get top dollar in selling a business, I just don't hold out for all cash without any kind of financing contingencies. There's a lot of money out there. Banks are willing to lend to solid businesses, SBA loans or non-SBA loans. But the financing and the structuring of the transaction is critical for the seller to get top dollar. Sage
advice. John, for business owners listening who would love to speak with you and perhaps get your help, how can they find you and connect with you?
My website is www.vraspen.com. My email address is John, John, @vraspen.com. And my office number here is 970-429-8220. And my office policy is only to represent sellers. I'm a managing broker, a regulated managing broker in Colorado. And as such, I could either be a transaction broker, which means a neutral intermediary, a buyer's agent, or a seller's agent. And I believe I offer the most value to our economic community by representing sellers. So the seller's my client, the buyer's my customer, and I can't accomplish the seller's goals unless I'm fair to the buyer. But that's important too.
John, this has been terrific. I really appreciate you taking the time to share with my audience today, and I wish you continued success for you and for all of your clients.
Thank you, Mark.
That was John Hornblower. He's a managing broker of VR Business Brokers in Aspen, Colorado. And this segment's been brought to you by booksgrowbusiness.com. It's the place where busy professionals get published to educate consumers, lead their fields, and to leave a legacy. That's all for now. I'm Mark Imperial, and thanks for joining me.